Warning, 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 danger, danger. These are some of the words being put out there in recent economic news articles. Today, warning and recession fears on the rise. Hey, everybody, my name is JJ. You're watching Bull, Boom, Bear, Bust. It is Wednesday, April 13th, 2021. Something I rarely do anymore is ask you to please subscribe. If you're not subscribed, please subscribe to this channel and please help us grow. We've been stuck kind of in a rut here, and I think part of it is because there's a lot of new economic financial news channels that are out. But looking back over the past few years, I think those of you that have been on this channel will agree we have been one of the most accurate channels out there. Now, I don't have time to sit there and go through all the different channels, but just from what I've seen, we have been very, very accurate on our reporting and kind of outlining where this thing is headed. And we're talking about the economy, the situation with the rising cost of living, these market bubbles that seem to be endlessly inflated and propped up beyond anyone's imagination. And today we've got more news here and another dose of economic reality. So please make sure you're subscribed. I think you're going to like the insights that we're going to bring you here. Let's start off right here with the housing market, and the Fed economists now are out there finally warning of a housing bubble. Now, isn't it interesting? Now that mortgage rates are finally rising, we're starting to see news like this, and we're starting to see actually people within the Fed warning about home prices and the housing bubble. Well, if you think there was a home price bubble back in 2008, which most people do, they agree, they look back and they see what the prices were compared to incomes and how crazy the amounts of debt that people took on were. Also, the very, let's say, unique type of loans that came out back then to get people into housing that really should not have gotten a house. They should not have been able to afford a house, but with these, let's say, exotic loans, that was a name given to loans and mortgages back then. Exotic loans. You had interest only loans, you had zero down payment loans, you had a massive amount of adjustable rate mortgages, and of course mortgage rates went up, and the ultimate effect was the housing bubble went bust. Well, home prices are way beyond where we were in the previous housing bubble. So the current housing bubble, and yes, it is a bubble. Well, we're finally getting some warnings here from the Fed. Now, just because there's a bubble doesn't mean it's going to burst. Home prices have been higher than the 2008 housing bubble for over 2 years now, almost going on 3 years. And this thing has continued beyond what most people had ever imagined. But with all the fundamentals in place, home prices can still go higher. Now, let's see what the Fed is warning us about here. And this is a recent article. Fed economists warn of brewing U.S. housing bubble as home values continue to soar. Well, of course, home values are soaring. There's a lot of different inflationary factors that kept rates too low for too long. They deregulated the banks. They took away any reserve requirement for banks. They bought record amounts of mortgage-backed securities, helping keeping the housing bubble inflated. Well, now the Fed is unwinding their balance sheet, or at least they're slowing down the purchases. They're still buying, they're just not buying as much. So it's no coincidence that at the same time we see rising mortgage rates, we now see these warnings coming out of the Fed. New research from the Federal Reserve Bank of Dallas indicates early signs of a brewing U.S. housing bubble. So they're actually not saying there's a housing bubble. They put the word brewing in there. That means there's no bubble, but it is brewing. So the soup is not done, but it is brewing. The witch's brew is not ready for consumption yet, but it is brewing. So in other words, they kind of backtracked on the headline there. They're saying there's a brewing U.S. housing bubble. All right, so let me know what you think about that. To me, it sounds like they're trying to use words to get out of admitting that there's a housing bubble. But it continues here, quote, our evidence points to abnormal U.S. housing market behavior for the first time since the boom of the early 2000s. The report's authors point to a number of economic indicators that suggest unsustainable home price growth, in particular, the price to rent ratio and price to income ratio are becoming increasingly out of step with market fundamentals. In other words, it's one of the same things we've been talking about here for a while. Prices are detached severely from incomes. So what has to happen when people are taking on higher home costs when their incomes do not rise fast enough to meet these rising costs? Well, people have to take on more debt and borrow more money. And of course, we're at all-time debt levels, all-time high debt levels right now. And that's why you had to see this continuing deregulation of the banks and the ending of the reserve requirement, the ultra-low mortgage rates. We also see that they're trying to play around with credit scores by taking certain things off of people's credit report. For example, certain medical debts now are going to be excluded from people's credit reports and therefore helping their credit scores. Also, people with very high debt levels still are maintaining good credit scores. So debt is now a good thing, and people that don't use credit cards and rack up a bunch of debt, sometimes their credit scores are a lot worse than someone that has tens and sometimes hundreds of thousands of dollars in debt. So it's almost like they're incentivizing people to take on debt and get into the lending system by keeping these credit scores higher, even for people with massive amounts of debt. Now, it's not until the payments become late, 30 days, 60 days, 90 days, that's when the credit scores really start taking a hit. But look back over the last couple of years, what's been done to prevent people from being late on their payments? Well, they've canceled rent in some areas. We had a foreclosure prevention program where people could not get foreclosed. In many cases, they didn't report that to the credit bureaus because of the health crisis. They stopped charging late fees, certain card companies anyways, to help people get through this. But here's the thing, we're not through this because we still have eviction moratoriums. And that is helping keeping rents elevated. And remember, when rents are elevated, that also puts more upward pressure on home prices because people are going to be more incentivized to go out and take on a loan and buy a home when rent is at astronomical levels. Now, speaking of housing bubbles, in Canada, it's even worse than in the US. In Canada, the average home price is over $800,000. So home prices in Canada are about 50% higher than here in the US, even when you adjust for the different currencies. And when you look into it, the Canadian housing bubble is more of the same. Ultra low mortgage rates for an extended period of time, easy money lending policies, and of course, all-time record levels of debt in Canada, just like here in the US. Now, when you drive around, especially larger cities, including here in San Diego, you see one of the effects of the housing costs and the high prices is increasing homelessness. Now, it's not the only factor, but it's definitely a contributing factor. We also have a massive substance abuse problem and an addiction problem here, causing more people to become just unable to keep a roof over their head. Even if you gave these people a free house, a lot of them wouldn't be able to maintain it just because they're so addicted to substances and abuse. But there was an interesting story that came out last summer that somebody sent me here recently. I just want to take a second to talk about it. Homeless people are actually refusing housing. They're refusing motels and shelters when they're being offered free housing. All right, now this particular article is from last summer, but this is still continuing today. A lot of these people will not accept help, and this is out of the Spokesman Review. When a homeless encampment was cleared, no one went to a shelter. The reasons are complicated. But fast forward to today, not much has changed. Here's a more recent report here. Most city shelter referrals don't lead to shelter. And this talks about another homeless encampment in Seattle, Washington. All right, so these people don't want to pack up their stuff and take it to a hotel or a motel for a few days. They don't want to take it into a shelter where there's going to be even less privacy. Even the privacy that they have in their tents on the street is, in their opinion, is better than being at a shelter. So we like to talk about possible solutions here. One of the solutions we talked about is converting some of these empty commercial buildings into homeless shelters, or at least places where homeless people can get out of the elements, get out of the rain. But even that is not an easy situation because you'd have to have somebody manage that and maintain all these people with, again, a lot of them with substance abuse problems, addiction problems. And after a very short amount of time, the commercial building would turn into a very scary place. Let's put it at that. So a lot of big problems, folks. High cost of living, driving more people onto the street, driving more people to substance abuse. A lot of people stressed out financially. There was a report put out a few weeks ago where 1 in 2 people said they lost sleep because of finances. So this is not going away because look at the spending. The spending's not stopping. It's actually increasing. And, we'll see if they actually let any air out of this housing bubble. They're talking about reducing the balance sheet. When you look at the Fed balance sheet, though, it's over 9 trillion or around 9 trillion. At the pace of unwinding that they're talking about, it would take between 8 and 10 years to fully unwind their balance sheet. All right, so let's take a look at this real quick before we wrap this up. Fed officials plan to shrink the balance sheet by 95 billion a month. That's per their meeting minutes. At that pace, folks, you're talking about at least over 8 years. I'd have to do the math, but at $9 trillion, 95 billion a month looks to be between 8, maybe 9 years to fully unwind the balance sheet. Does anyone think that they're going to unwind this thing for 8 years and shed all of the assets from their balance sheet? I don't think so. Please let me know what you think down in the comments. Will the housing bubble deflate this year? Again, I don't think so. When you look at the supply shortages, the rising energy costs, it's affecting construction costs and all different industries. So I don't think it's going to deflate. Please let me know down in the comments. Is the Fed warning something that's credible, or is it just more hot air out of the bubble blowing bankers? Please let me know. Thanks everybody for being here. Bye for now. Peace.